Hey, what up guys? Ivan here. Welcome to another CLC free watchlist. We are ready to share with you some in-depth analysis and some tips on the free analysis that we share during the weekend in our free Telegram channel. If you haven't joined yet, join now. I leave you the link below in the description. In this free channel you can find a ton of really good stuff, new analysis, free analysis, setups, macroeconomic article, and many other things. So if you haven't joined yet, join now. Now, today we will talk about 4 pair, Australian dollar, US dollar, a little analysis on Euro, Australian dollar, Euro, Japanese yen, and finally GBPUSD. So now we can start with Australian dollar, US dollar on the 4-hour time frame. We can see here, guys, that the price in the last weeks started this huge bearish movement that break this bearish trend line, break this key level 0.68, and after this break find the strength to start a second bullish phase that almost reach this key level here 0.69, but we can see that the price didn't find the strength to go higher to really touch this key level, and from this point start a correction that bring the price to touch this Fibonacci retracement and almost touch this key level 0.68, where we can find also this second Fibonacci retracement. And I shared this setup on the free Telegram channel during the last week, but we can see that the price didn't reach our entry point around 0.6805, failed to reach our entry point and try to go higher, but failed to start a new bullish movement. And we can see that this week, after the weekly opening, the price try again to break this key level, but just after this bearish candle, the price has formed this bullish engulfing candle that was a strong bullish signal, and we can see that just after this first bullish signal, the price find the strength to start this bullish movement that this morning has bring the price to form new high, but failed to pass 0.6875, and we can see that the price now has just formed this bearish engulfing candle that could be a strong bearish signal for the next hours and days. But for me now, we need to look carefully at the price action, waiting for the FONC minutes rate this evening, because this news, as you know, bring a lot of volatility into the market and could give a big push to the upside or to the downside at all the pair with the US dollar. But for now, guys, the price is following our analysis, because I share this possible price action into the weekly PDF that I share for free in the free Telegram channel, and I talk about this possible bullish movement, because using Fibonacci here we can see that the price has touched these 2 Fibonacci retracement before start this bullish phase, but we can see also that the price has already failed many times in the last month to pass this key level 0.69. We can see a first reaction here, second fail attempt to break this key level, and this could be possible the third fail attempt to reach 0.69. So for this reason, guys, for now we don't need to rush into any trade, because for me now, after this bearish engulfing candle, the price need a correction, maybe a retest of this Fibonacci retracement before the next bullish phase. But for today we will have to watch carefully the FONC minutes rate, try to understand if the US dollar will find the strength to push higher or will search a deeper correction, because this could impact a lot this pair, Australian dollar, US dollar. Obviously the Australian dollar in the last weeks and months has not many strength and was one of the weakest pair of the market, so we need to watch carefully the price action on the US dollar, because a big movement on the dollar index could bring also big movement here on the Australian dollar, US dollar. For now, guys, after this bearish engulfing candle, for me, the price need a correction. So now we need to just wait the funk minutes rate this evening, try to understand if the price will find the strength to reach finally 0.69 or will start a deeper correction. Obviously, if the price will find the strength to start a new bullish phase, a 4-hour and daily closing above 0.69 will be a huge bullish signal that could bring the price to the next support area, support and resistance area around 0.6960 here. But for now, we need only to wait, look carefully at the price action below this key level, because if the price will stay below this key level, for me, the main direction remain bearish. But if the price will find the strength to break this key level with a daily closing above it, this will change the main direction to bearish, from bearish to bullish, and will be a huge signal that could also give us a good entry point. But for now, really, the price seems not ready to reach again this key level, and we need to watch the price action after this bearish engulfing candle for a possible retest of this Fibonacci retracement, or finally a clear touch of 0.68. Now we can watch Euro Australian dollar on the 4-hour time frame. Why we talk about Euro Australian dollar? Because during the last week I share on the free Telegram channel a free PDF on Euro Australian dollar with a possible short setup from this point here, because after this strong bearish movement here, I expect for the last week a correction in this area with a possible second touch of this bearish trend line before the next bearish phase. But we can see here that the price after this break failed to go higher and come back above this key level 1.63 and start a second bearish phase that break this bullish trend line, this slowdown area around 1.6250, and reach the next support area around 1.62. From this point we can see that the price started to form a series of lower shadow, and for me this was the clear signal that the price is not ready to go lower and need a correction before the next bearish phase. And using Fibonacci here from the beginning of this bearish phase, we can see that just below 1.63 we had this Fibonacci retracement 38.20, and the price during the last week started this bullish movement and perfectly touched this key level and this Fibonacci retracement. And as you know, this is the base of our strategy, CLC Academy here. And we can see that just after this break retest, the price start a new bearish phase and give us two other confirms with these two shooting star candle when the price tried to go higher and come back above 1.63 but fail to pass this key level, and from this point start a second bearish phase that bring it first to touch 1.62, and this week bring it to break this slowdown area and almost reach our take profit around 1.6150. And this is an example, guys, that our analysis many times obviously follow the main direction and our price action, but didn't give us the right signal or the right entry. And for this reason, for us, it's really important that you join our CLC VIP channel, because in our community and in our VIP Telegram channel, we share update, new setup, and obviously we talk a lot about the price action, how they react to the price action and strange movement. And we can see a clear example here. I told to the guys on the VIP Telegram channel to remove this order, and after this bearish phase we place a simple order here, sell limit order. The price perfectly touch here and start a strong bearish phase that for now has give us at the lowest point possible 130 pips. Now we are completely risk-free and we need only to watch if the price will start a second bearish phase to reach perfectly our take profit. Obviously, this trade is strongly related with the previous analysis on Australian dollar, US dollar, because if the price today will find a strength to go higher for a new bullish phase, this could be also a big bearish signal for Euro Australian dollar that could bring the price to touch our take profit around 1.6150, and we can see that the price in the last month has already reacted with these big lower shadows, this key level. So if the price will reach 1.6150, I will look carefully at the price section, because a clear reaction could bring the price to a new correction before the next bearish phase, and this could also give us a second entry point. But a clear break to the downside with a daily closing below this Fibonacci extension and this key level, this will be a huge bearish signal that could bring the price to the next bearish phase with target around this key support 1.60, sorry. And for now, we need only to watch if the price will stay below this slowdown area around 1.62. For me, the main direction remain bearish. But if the price will find a strength after this strong bullish engulfing candle to break this slowdown area, and ideal scenario, the break of this bearish trend line, this movement could bring for me the price to a deeper correction and for another test of 1.63. But for now, really, we don't need to rush into any trade, especially you that you haven't taken this setup one and this short trade. So we can see that the price is in a consolidation area and lateral channel. So now we need to watch carefully the price action below this level. As explained before, today we will have many news on CAD, on Euro, and especially this evening on the USD. So we need to be very careful, because for me, if the dollar index will start a new bullish phase, I expect a deeper bearish movement for Euro Australian dollar, because the Euro is most impacted from the news on the US dollar. And I expect a big push to downside on Euro USD if the news will be positive for the US dollar, and also I expect a big push to the downside of Euro Australian dollar. I want to talk about this trade only because it's a small update on the trade that we shared for free 2 weeks ago, so I want to make a quick update to try to understand the next movement and try to give you some in-depth analysis of our trade. Also, if you haven't taken this trade, because it's shared only on the VIP Telegram channel. But I hope this example could help you to understand how strong is our strategy, CLC Academy. We test our strategy for 2 years now, and the last version of our strategy is very effective, only with order, and take away all the pressure for the traders, because we make all the hard work during the weekend and we leave the price make his movement during the week. So for me, it's a very, very effective strategy that could also leave you a lot of free time. So for me, this is one of the strongest strategy into the market. So I recommend you to join, also because in these days we have the Halloween sale, and you can join the VIP Telegram channel for only €49 for month. So for me, it's really a gift, because it's more than a 50 discount code. So for me, it's a strong discount, and I invite you to join now, because we are making a good profit in the last weeks. Euro Japanese yen, we talk about this pair because yesterday I shared with you a free analysis on the free Telegram channel. I hope you find some value in this analysis, and we are on the daily time frame. We can see here, guys, that the price here during the summer between May and July fail to pass this key level 123.40 many times, and we can see that from this point at the beginning of July the price start a huge bearish movement that break many key level and reach this key support here around 116.50 here. Here the price has given us a huge bearish signal because we can see a clear daily closing below this level, but just after this obviously false break, the price find the strength to come back above this key level and start this strong bullish movement that break this bearish trend line, and obviously this was a huge bullish signal. But we can see that the price failed to close the weekly candle above 120 here, a very key level for Euro-Japanese yen. And we can see that from this point the price start a strong correction that led it to touch here 117.20. And using Fibonacci on this first bullish movement here, we can see that the price perfectly touch these two Fibonacci retracement 7.1, and from this point start a huge bullish movement that break this key level, giving us a huge bullish signal. But we can see that also the price break this slowdown area around 120.50, and here the price closed the weekly candle above this second bearish trend line. Obviously this was a huge bullish signal, and we can see that the price last week tried to go higher after this huge bullish signal, but failed to pass 121.50, and from this point form a first bearish engulfing candle here, try to go higher, form another bearish engulfing candle. For me, these two bearish candle was a huge bearish signal and a clear signal that the price is not ready to go higher after this strong bullish movement. And using Fibonacci from the beginning of this last and second bullish phase, we can see that this Fibonacci retracement perfectly matching this slowdown area, and this second Fibonacci retracement 7.1 matching perfectly 118.35, a key level for Euro-Japanese yen. So we can see now that the price is trapped in this side channel between here 120.40 and 121.15 here without a main direction. So now obviously guys, don't rush into any trade or don't think of an entry on this pair, because for now we don't have any bullish or bearish signal, and it's okay to stay away from the market, and let's settle the price action only waiting for clear signal, because obviously a clear break to the upside with a daily closing above 121.50 could bring the price to a new bullish phase and could also give us a second entry point after our perfectly entry here. But for now the price is in this lateral channel, and obviously the first thing to watch carefully will be the clear break of this slowdown area and this side channel, because using Fibonacci from this second bullish phase, we can see that this Fibonacci retracement perfectly matching the two key level. So if the price will come back and will close a daily candle below this lateral channel, this will be a huge bearish signal that could bring the price to a deeper correction before the next bullish phase. In other hand, if the price will start a new bullish phase and will break 121.50, this will be a huge bullish signal. Obviously the perfect scenario guys will be also a daily closing above this 200 period MA, because this will be the perfect bullish scenario. Break of a lateral channel, break a key level, break of 200 moving average, this will be a huge bullish signal. And if the price will break above this area, I expect a second bullish phase with first target around 123.40. In other hand, if the price will break to the downside this side channel, I expect a deeper correction with first target around 119 and possible extension of this correction around 118.35. For now, guys, for me, we don't have any bullish or bearish signal, but the funk could bring a lot of volatility into the market and could also give us strong movement. So for me, I personally will wait the funk minutes this evening, try to understand if the price will find the strength to go higher or will search a deeper correction after this huge bullish movement. And now we can watch GBPUSD. Not much to say really on the 4-hour time frame, because we can see small candle here without a main direction this week. But going on the daily time frame, we can see here that the price in the last 2 weeks and month especially on August has break this yearly support 1.21. And obviously this bearish candle was a massive bearish signal for the price action here on GBPUSD. But we can see that after this break, the price finds the strength to come back above 121, this yearly support, fail to go higher, another false break. So for this reason, guys, I told you about the strange movement on GBPUSD, because the price on this pair every time make big shadows and stop hunt before the real movement. We can see another clear example here where the price has formed this big lower shadow, try to pass 1.20 but fail to break this key support, and from this point start a strong bullish phase that bring it to touch here 1.25 but fail to go higher, and from this point start a strong correction that bring the price to touch here this key level 1.22 3 weeks ago. And we can see after this correction, because using Fibonacci we can see another clear example that this Fibonacci retracement 6.1 and 7.1 are two of my favorite Fibonacci retracement. And we can see that using from the beginning of this bullish phase, the price started this correction, break this key level 1.24, and after this touch start a huge, for me, one of the strongest movement I ever seen in the market, because we can see 800 pips movement without any type of correction, without any type of retracement, vertical movement that bring the price in only 8 days to gain over 800 pips, so 100 pips for day, guys. Huge movement. But obviously after this huge bullish movement, the price give us a strong bullish signal, because the price here break this bearish trend line and obviously here break a strong key level 1.27, start a second bearish phase, but we can see that the last week the price failed to break 1.30, and using Fibonacci from the beginning of this huge bullish phase, we can see that 38.20 perfectly matching 1.27 and 6.1 perfectly matching the slowdown area around 1.25. So for me now, guys, we need to watch carefully the price action, because after this huge bullish movement, the price need a correction. And as you follow our analysis from many times, you know that we love break and retest strategy. We can see how many times the price react this key level. And if the price will start a real bearish movement, I expect first of all a clear touch of 1.27. And obviously, guys, for now, with all the news on the Brexit, with all the news on the US trade war between US and China, I expect a big movement, but I am very aware of possible stop hunt, especially on GBPUSD or Euro Australian dollar. So for now, I prefer to not place any order around 1.27, because if the price will start a deeper correction, I will look carefully at the price action here, because a clear reaction could bring the price to a new bullish movement. But personally, I expect a retest of 1.25 because we have a very good Fibonacci retracement in this area. This level here react the price many times in the last weeks before this huge bullish phase, and I expect a correction. And then in this area we have also this bearish trend line, broken bearish trend line. So if the price will start a new correction, I expect a touch of this key level, this broken trend line, and this moving average before the next bullish phase. But for now, guys, the price is still trapped between 1.30 and 1.27, and looking at the 4-hour time frame, we can see that the price has not given us any useful signal this week. Yesterday, the price break with this bullish engulfing candle, this bearish trend line. We have a possible short setup from 1.30 as explained in the weekly PDF, and this is the free setup that I share with you during this weekend. But for now, for me, the price has not made any interesting movement. We can see small candle this week. We can see how strong are these candles from the last weeks and how small are the candles for this week. So this is a clear example that the volumes are still slow. So I expect a big movement this evening after the FOMC, and maybe this news could help a lot our trade, giving us some interesting signal. But for now, guys, all the market has his eyes on the FOMC this evening. So I hope in this video you have found some value and you can find some help with your setup for this week. Thank you for watching this video, guys. Thank you for the support. We are really glad and really thankful for your support. If you haven't joined yet, join the free Telegram channel, and also in this week we will have our Halloween sale promotion for the VIP Telegram channel. You can join only for €49 for month. For me, it's really a gift for you guys because I'm lost half of my profit with this sale, but I want to help as many people as possible to join our VIP Telegram channel and to join our Slack community with all our traders. We want to create a big community, and this could help a lot you and us with our trading strategy. So thank you again for watching this video, guys. Keep your eyes open on the FOMC this evening, and we wish you a good day, and thank you for supporting the CLC trading.